Hello, everybody, and welcome back to my investment journey. This is episode 7. It's 19th of December 2025, and we have a new trade to make. So, yeah, let's jump right in. We see here the MSCI emerging markets that I'm investing in. I have €1,000 ready, and let's go ahead and make the trade. €1,000. All right, let's review the order. Seems all good. Order placed and done. Let's see if that worked. And there we go. On our wealth tab, we can see we have now almost €7,000 in the portfolio. Okay, so we make a quick jump from Friday to Sunday. Sunday is usually when I record the second part of these videos, and as you can see, the market climbed up even further, and so we ended the week positively. So it didn't look like it, at least until, I think this is Wednesday or Thursday, but then there's an end of the week rally. So we're still down a little bit overall, but yeah, kind of a positive end to the last full trading week of 2025. Now, let's look at what happened. As you can see here, MSCI World and MSCI Emerging Markets, they inched up a little bit, but, not a lot. Across the countries, it's kind of interesting. The MSCI World, most of the countries here seem to have developed positively, and in the emerging markets, most of them negatively. It looks a little bit counterintuitive, I know. The ETFs, they went up both by a similar amount, but then most of the countries in the world ETF, they went up, and most of the countries in the emerging markets ETF, they went down. Now that's once again the same story. The constituents of these country indices are not the same that are included in the respective ETF. And I think that's to be expected. I think especially in the short run, you should see some deviations. In the long run, I think you shouldn't see too many crazy deviations. All right, so I once again went through here a weekly update and marked the good, the bad, and the ugly. It's not a real story emerging, so I just asked ChatGPT to summarize the week in a movie title, and the title it came up with was A World Divided by Rates. And so it says that there is diverging economic momentum and policy paths. So the Bank of Japan made a historic rate hike, while US and parts of Europe leaned towards easing as inflation cooled. Yeah, I would just go through the individual countries here. In the US, not a lot happened. The week didn't start well. There's a continuation of the tech stock weakness and ongoing concerns about AI valuations, as always. But then by the end of the week, the indexes reversed. There's some positive news. First, an encouraging inflation report, and then also strong earnings results from semiconductor manufacturer Micron Technology, and that seemed to help shift AI-related sentiment. All right, interesting. So jobs data is mixed. Okay, so overall seems like, good things happened here. But the unemployment rate also rose. So yeah, it's mixed. The good thing here is US inflation unexpectedly cooled, and that seems to have been perceived positively by investors. But then again, December business activity is slow, so the purchasing manager index declined to 53. Still above 50, that's good, but a slowing is never good. So yeah, that's why it's here summarized by an economist that the economic growth spurt is losing momentum. Europe, mostly positive signs of economic growth and looser monetary policy. So the rate remained unchanged, and the ECB President Christine Lagarde said the policy remains in a good place. And the ECB also raised the estimates for annual growth. For the EU here, I think that's EU, to 1.4%. Not huge, but it's Europe, right? So any positive sign here is good. Japan is interesting. Their index declined quite a bit, but not for the reason you might be thinking about. So there was this long anticipated raising of the short-term interest rate by the Bank of Japan. But basically the market had already completely priced that in. So the main reason why they lost valuation here is because technology-oriented stocks suffered again. Lofty valuations and aggressive spending on artificial intelligence wasn't perceived positively. And then also what was a bit of a weak point in relation to the interest rate was that the governor here didn't give any indication about what the bank would do next, and so that really weakened the yen a bit. And core inflation rate rose, so that's something that is also not amazing. China, yeah, mixed bag again, lackluster growth. Retail sales rose 1.3%, but that's the slowest pace since the pandemic. Fixed asset investments fell, industrial output trailed the forecast, so all in all, not good. And then consumption also remains a weak spot, but still Beijing sticks to its current manufacturing-led growth strategy, but tries to boost consumption still. But consumption is a weak spot. But now I see here most of this other stuff, which is the manufacturing part of the economy, is also not great. So yeah, what happened to China here? Meh, pretty much flat. Yeah, that's about it. Here you see a little bit more. Mexico, we see weak economic activity. Interest rates are reduced again. What do we see here? Mexico, yeah, not a good result. So that's about it. I mean, there's really mixed picture across the board. We see Taiwan here pretty bad. Let me see here, Taiwan. Yeah, you see the big ones. TSMC, Honhai, and Quanta Computer. And yeah, basically technology stocks, they're not doing so well. And then we also see South Korea pretty bad. What happens there? I think they also have the AI bubble going on. There seems to be a company that was working together with Oracle, and Oracle really pulled down the market with their bad earnings call last week. So yeah, that's all in all the situation here. And you see SK Hynix and Samsung Electronics, they are really involved in the AI space. They fell particularly strongly. So yeah, that's about it. I'm curious what happens next week. That's the last week of the year. Once the year is over, we're going to do a full year review, see how the stocks develop. Until then, wish you all the best. Happy holidays, Merry Christmas, whatever you celebrate, and I see you next time.